Good morning, traders, and happy Friday. It's 8:02 a.m. Chicago time, 9:02 Eastern on the 27th of May, 2016. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not indicative of future results. Again, today's Friday. One of the key things you want to keep in mind today is that we do get Fed's Yellen to come out and comment at the Harvard Radcliffe Day. Uh, the expectation is that she'll have prepared remarks on the economy. That release is expected at 12:15 Central, 1:15 Eastern U.S. time. The other thing we need to keep in mind is that it is Memorial Day weekend. This is a big holiday here in the U.S. It is the start of summer, and here, particularly in Chicago, um, people are very quick to head to the beaches here on the lake. So the under normal circumstances, if we did not have Fed's Yellen coming out at 12:15, I would say the trade will likely go dead at about 10:30, 11:30 Eastern, about the European close. But today, I believe that some of the bigger traders are going to need to hang out and wait for Yellen's comments. So there's going to be a lot of attention on that as that takes place. Once that's done, the expectation is for a very dull close. Today, the market is open all day, ready. The trading hours are normal. Sunday has a normal open at 5 p.m. Central. Monday is a normal trading day, but it closes at noon Central. So all markets are closed at noon Central. The underlying equities will be closed. It'll be a holiday trade, so just make sure that if you are going to trade that day, that you're very clear about which emergency numbers you need to have to contact your broker or your clearer in case you trade and get yourself into trouble. So with that being said, let's have a look at what we've got overall. Again, Yellen at 12:15 Central, 1:15 Eastern. China's industrial profits are up. The industrial profits in China rose 4.2% year over year. This is much better than the 11.1% drop that was recorded in March. Japan is still dealing with a consumer prices slide. Consumer prices in Japan fell 0.3% year over year in April, slightly better than 0.4 expected, but they're still in a terrible deflationary cycle, and it just does not look like they're going to work themselves out of it. The Prime Minister has decided to delay the sales tax increase. The sales tax had been scheduled to increase to 10% from 8% in April 2017. That is being delayed again to stimulate spending. Just a huge problem for Japan, unable to get out of this rut here for a long time. Let's have a quick look here at what was expected yesterday from the trader bite. The primary hypothesis is a test up and a drop back into that 2085 area, and the potential, and we talked about this yesterday, strong potential for a sideways market yesterday. That didn't completely work out. Was looking for a test of this week high, as I highlighted here in the video. Expected a test of the week high and then potentially a test of the other side. That didn't work out. Hypo 2 was looking for a drop, finding buyers in the 85-75 area, and then a potential for a push to 94, 93, 94, and then closing somewhere in the middle. That didn't happen either. And then Hypo 3 is a drop to the point of control from the prior day, from Wednesday, and a rally to 94 and above. That didn't happen either. Nothing happened yesterday. There was a quick push on the open. We could see it better on my trigger chart. There's a quick push on the open. It looked like we had Hypo 1 Looked like it was going to test that weak high from the prior day, move back to the middle, and then test below the 85.75 and then start moving lower, except this part here did not happen, and we just pushed right back. The profile is completely Gaussian, lots of accumulation of volume in the middle. The point of control yesterday is in line. As you can see, the point of control is this bright pink line, in line with the prior day's bright pink line. The value area is slightly lower, but overall yesterday, just absolute and complete balance. There is nothing that the market wanted to do yesterday. We did not see any higher time frame participation as we've seen over the last few days right at the open. Because of this, we have to throw on a 2-day profile. Um, in fact, let's add volume to these because we need to see it. The 2-day profile is very much stuck here in the middle of nowhere. 1.98 million contracts traded in the day session, and as you can see, the profile is very sharp, has some very high kurtosis towards that 87.50 area. The profile seems incomplete on the downside. It's not balanced to the downside. It seems to be done on the upside though. So the expectation here is that further highs may be attainable, but I'm not expecting a continuation of the rally. In fact, this morning I'm not expecting much of anything until Yellen. So that being said, with the by superimposing what we have in the overnight session, which was a slightly higher high over yesterday and a slightly and a basically a double top with this is a double top with the prior day with Wednesday. Right now we have what looks like a weak high. Essentially, the market has pushed up, sloped down, and has pushed up again, and this looks like a cup and handle type of formation with a pivot point at 92.50. We're currently trading 2090 right against yesterday's close. We're trading on the edge of value and really in the middle of the range, yesterday's range. Nothing new overnight to price in, despite the news that came out of China and Japan. There's nothing to price in here, and it's just not going anywhere. I see a lot of disinterest, and we've seen disinterest yesterday and today. And by the way, I found out yesterday that a lot of New York schools were out because of snow days accumulating, and it seemed like the holiday weekend went from a 3-day weekend to a 5-day weekend for a lot of folks. So this could explain part of the reason why the participation is not there. Not that we care what the reason is, we just care about what the market has done, and what the market has done is absolutely traded within balance, and it's moved from the 2093 area to 2085.75 and is stuck in the middle with you. So this is where we are today. What can we say about this morning's primary hypothesis? I would say more of the same. We're expected to open right on the edge of value or in value. The expectation is we drop and we trade this range here. I don't know. It's hard for me to tell if we have enough energy here to finally dissipate that energy upwards and continue get the continuation move on the rally. But mostly today, the expectation is for complete balance and for the market to go dry fairly quickly. Expect volume to be fairly low or relatively low. As you could see from yesterday, the average 20-day volume is shown here with these yellow thin lines, and the actual volume is is shown by these green and red bars. And you can see it, the entire day held about a 30% lighter than normal or lighter than average volume throughout the day. The day before was fairly reasonable. We kept up The day before that was fairly reasonable. We kept up. Yesterday, we just couldn't get participation as we normally do. The expectation is that continues on till today. Okay, so there's nothing, not much to say, not much more to say here, except that it is Friday. And because it's Friday, we continuously have to remember that we have the weekend, especially this one, a long one. We have the weekend to go into, and it's not a good day to try to create trades or build, anticipate trades. It's a good day to just react to what you perceive to be a good edge on your end. It requires a lot of patience and discipline, but it's better to go into the weekend with a humble, um, you know, scratch day or slightly up or slightly down day than to go into the weekend, especially this weekend, with just a big hole in your pocket. Tuesday is likely to be fairly quiet, and then later in the week, next week, we get some major numbers which are expected to bring volatility into the market. Better to wait for that, in my opinion. So overall, this is what we have. Remember, Memorial Day weekend also kicks off the summer trade, as someone just wrote in the chat room here. It kicks off the summer trade. In previous years, the summer trade is pretty dry and it's pretty quiet, but in the last couple of years, we've had some incredible moves over the summer. Many of you will remember August 24th. Last year, but we had good volatility throughout the summer. We had Greece a couple years ago. We had China last year. Japan looks like it this year. We'll see what happens, but this is a good time of year to just focus on execution, focus on your plan, focus on perfecting what you're doing versus focusing on pushing your limits in size or in trading, because in general the opportunities are more scarce. So look for that. Going forward into the summer here. Good luck to you. Have a great weekend. There will not be a Trader Bite on Monday, but Stage 5 will be open until 12 p.m. if you're part of Stage 5. And we'll see you on Tuesday. Take care. Bye.